This is Matthew Cratter from Trader University, and today I want to talk about the crumbling of the US dollar system. We're beginning to see some real cracks form in this system, and it's something that everyone should be aware of. The latest news, Russia saying that it's going to remove dollar assets from its wealth fund. This is a wealth fund that has been funded by oil revenues in Russia. Currently, about 35% of their investments are in dollar assets. And what this means, it might mean US stocks, US corporate bonds, US treasuries, US real estate, anything that is denominated in US dollars. And they're going to be moving these US dollar assets into other buckets. So they're going to be increasing their euro holdings up to 40%, their yuan holdings up to 30%, as well as increasing their gold holdings. This is the National Wealth Fund. That is the English translation. Now, on the surface of things, this looks like just some political positioning ahead of the summit that's set to take place just a couple weeks in Switzerland. But I think it's actually much deeper than that, and it's very significant for the currency markets and for the financial markets. In order to understand this, you have to remember that we used to be roughly on a gold standard where the US dollar was redeemable for gold, and then everyone else pegged their currency to the US dollar. This was in the wake of the Bretton Woods Agreement after World War II. This really came to an end in the late 60s. A lot of European countries like France were saying, hey, we've got a bunch of dollars here. Why don't you give us some gold? And there were just too many ships leaving the United States and going to Europe full of gold. And so what had happened is the U.S. had basically printed more U.S. dollars than it had in gold. And so what happened is Nixon was forced to break this connection. He closed the gold window in 1971, which means you could no longer go to the proverbial window, give him $1, and get some physical gold in exchange. Now, the gold standard, this loose gold standard, this Bretton Woods arrangement after World War II, after the closing of the convertibility window in 1971, the gold standard was really replaced by a loose petrodollar standard, where the U.S. dollar served as continued to be the global reserve assets, chiefly in its function as the main currency used to purchase commodities. And of course, the most important commodity, especially in the 1970s industrial economy, was was crude oil. So the gold standard was replaced sort of by an oil standard in which the U.S. dollar, you needed U.S. dollars in order to buy crude oil. So let's say you're a small country in South America like Uruguay, and you don't have your own oil. You're mostly an oil importer. That meant that under this new petrodollar system, you needed to get your hands on some U.S. dollars to buy oil. Otherwise, Uruguay may not have needed to even touch U.S. dollars. They could do everything using South American currencies, including their own peso. But under the petrodollar system, they needed to get their hands on U.S. dollars, which means they needed to exchange goods and services for U.S. dollars, or they needed to access U.S. dollars through the FX markets by converting the Uruguay peso, I believe it's the peso, to U.S. dollars. So this created an unnatural demand for U.S. dollars that would not otherwise be there, and helped to solidify the U.S. dollar as still being the world reserve currency. So it created more demand for U.S. dollars than you would have otherwise had, given just normal trade and manufacturing and exchange of goods and services. So the petrodollar helped to continue to prop up the U.S. dollar, and there was sort of a gentleman's agreement. We had something similar in recent years with China, where China sells us goods and then takes those U.S. dollars that we give them and reinvests it back in the U.S. Treasury market. They stopped doing this a few years ago, but there's something similar happening with the Middle East oil producers, in which they would sell oil to the U.S. or to other countries in exchange for U.S. dollars. They used to only accept U.S. dollars. This was part of the petrodollar standard. And then they would take those U.S. dollars and recycle them back into the U.S., whether they got the U.S. dollars from European countries or from the U.S. itself. Those U.S. dollars would end up going back into the U.S. by being stored in U.S. treasuries, U.S. government bonds, U.S. stocks, U.S. real estate. And this is why you see, for example, a lot of wealthy Saudi investors owning a lot of tech stocks, like Tesla, and in the old days AOL, and all the internet stocks. So this was the agreement that those U.S. dollars that were exchanged for oil would make their way back into the U.S. financial markets. Now, this made everyone happy because it kept the U.S. stock market high and having a higher valuation than it would otherwise have. And by buying U.S. treasuries, whether it was China recycling their dollars back into U.S. treasuries or Middle East oil-producing countries recycling their U.S. dollars back into treasuries, this extra demand for treasuries helped to finance U.S. deficit spending and helped to keep interest rates low, which was good for government spending, government borrowing, as well as good for assets that are valued based on a discount rate. The lower the interest rate, the higher the asset value. And this applied obviously to stocks and to real estate. And keeping the stock market high in the U.S. and the real estate market strong meant higher consumer spending, which of course meant more demand for crude oil and more demand for Chinese goods as well. So this was the informal system that has evolved, especially since China joined the WTO, the World Trade Organization, in 2001. Meanwhile, as we've said in other videos, China has stopped buying U.S. treasuries on the margin. If you found this video helpful so far, I'd encourage you to hit that subscribe and like button and maybe share the video with a few friends who are interested in financial markets. So as we said, we had the recycling of the U.S. petrodollars, recycling of dollars sent to China. Everyone was happy. Basically, everyone was happy unless they were starting to get a little tired of the U.S. dropping bombs in your neighborhood, the war in Iraq, the war in Afghanistan, or in the case of Russia, getting tired of having constant sanctions imposed on you and external people telling you how to run your own country. And so in recent years, and this is really accelerating now, there's been a move, especially by powerful countries like China and Russia, a move away from the US dollar and what the French used to call its exorbitant privilege, in which the US could just print up its own dollars, use that to buy metal and other commodities to make bombs, or use it to buy crude oil. And that's nice. It's nice to have the money printer, but it really is an exorbitant privilege. It has led to the hollowing out of the U.S. manufacturing sector, class warfare in the U.S., etc. So there are downsides as well. So the move away from the U.S. dollar started a few years ago. As we'll see, it really started after the great financial crisis in 2009. But here's an article from 2019, one of Russia's top oil-producing companies, Rosneft, switching to euros rather than U.S. dollars for its oil products. So this is basically Russia selling oil for euros instead of dollars. Something similar happening with China and its ties in the Middle East with oil-producing countries looking to buy crude oil directly using yuan and persuading these Middle Eastern countries to accept their own currency, thus obviating the need for U.S. dollars. So you can see these large countries trying to work around the U.S. dollar standard and the petrodollar standard. As we said, this really dates back a few years. I think the great financial crisis of 2008 to 2009, the way it was handled by the beginning of money printing and quantitative easing in the U.S., really opened a lot of U.S. Treasury international investors' eyes to the fact that the U.S. was being run much differently than it had been in the past, and that the U.S. dollar might not be the best place to store your wealth. And so here's an article from even as early as 2012 about China already buying yuan from Iran. This is one reason that you don't hear a lot about why the U.S. Seems to hate Iran so much, for fairly unjustifiable reasons, in my opinion. So here's an example, another example of countries trying to work around the U.S. dollar, the petrodollar system, and conduct commodity transactions directly in euros or in yuan, which of course China can print as many as they want to. So what we're seeing are multiple cracks forming in the US dollar system. It's significant, this wealth fund announcement out of Russia. This is just another crack forming. Basically, the new system looks something like this. Europe, as we all know, is highly, highly dependent on Russia for its natural gas and crude oil. Europe could not exist without energy from Russia. And so it makes sense that Russia would want to accept euros rather than US dollars. China also has a huge manufacturing base and also is a very large country with a lot of people. China needs to buy energy, natural gas and crude oil from Russia as well. So then Russia accepts the yuan, Russia accepts euros, and in the process really bypasses the US dollar with two of its biggest trading partners, Europe, the European Union, and China. So as far as I can tell, Russia will still accept US dollars in some cases, though obviously Rosneft has moved over to accepting only euros. But the idea is that they will immediately convert it to euros, yuan, and gold. And this is what's happening with the wealth fund that is funded by oil revenues. So on the margins, I would say this is definitely bullish for gold. Those of you who watch my channel know that I'm not a huge fan of gold. It's really a controlled commodity and the source of a lot of our problems in terms of the gold standard led directly to this awful fiat system that we have simply because gold needs to be stored. It's very difficult to store, and this leads to a lot of centralization and leads to governments owning all the gold. So this is still bullish for gold on the margins, I would say. It doesn't mean necessarily that gold's going to go up, though if this were the only driver, it would mean that gold would need to rise in US dollar terms, simply because you have China and Russia trying not to use US dollars, but both of them wanting gold. And so this would suggest that at least gold would need to rise in US dollar terms, maybe in yuan terms and euro terms. I have less of a firm opinion on that. And on the margins, yes, this would be bullish for the euro versus the US dollar. Just a little less demand for the US dollar and a little bit more demand for euros by Russia. So on the margin, this is good, but it's important to remember that both the euro and the US dollar are fiat currencies. They have unlimited supply, and they're rapidly and constantly being devalued versus real things by money printing. And what this means is that real assets are rising in fiat terms. Your groceries are getting more expensive. Your gasoline is getting more expensive. Everything else, real estate's getting more expensive. So the relative exchange rate between fiat currencies is ultimately less important than the fact that all of these fiat currencies are sinking ships. And in this way, gold is a much better alternative than fiat currencies, though I would argue that gold is not nearly as good as Bitcoin, and we've discussed this in multiple videos. My greater point here is that the the global financial system is transitioning away from the US dollar. And these US dollars were traditionally parked in US treasuries, US government bonds. And the system is transitioning away from US treasuries and the US dollar being the world's primary reserve asset. What will replace it? What will this new system look like in 5, 10, 20 years? Perhaps something like John Maynard Keynes's Bancor, which was a sort of a supranational currency that was backed by multiple fiat currencies, basically a basket of fiat currencies. As I've said, it's important to recognize that these are still, if you have a basket of fiat currencies, you have a little bit of diversification there, but you still have the problem of central banks printing their money and debasing their money. Fiat currencies always go down over long periods of time versus real assets like real estate, gold, and Bitcoin. So even if you move to something, a world in which you maybe have 3 world reserve currencies, maybe euros, yuan, and US dollars, it's a highly unstable situation. It's more likely that one of them wins. My bet would probably be on the yuan, simply because China is so smart and they have such good long-term planning. But even if that happens, whether we get a new world reserve currency that's the yuan or it seems unlikely to me that it would be the euro. You just don't have the same cohesion in Europe that you do with China. But either way, whether you end up with a a single fiat currency being the new world reserve currency or basket, either way, store of value will remain with scarce assets because these fiat currencies will continue to be printed and debased. As we've talked about in previous videos, Bitcoin really is gold 2.0. It's easier to transport, it's easier to store, it's easier to verify or assay, to use the gold term. It's much more scarce as well. There should be a C in there. It's much more scarce, has a higher stock to flow than either gold or silver or any of the other traditional stores of value. And so you have this game theory that's still in effect where the first central bank to take a significant position in Bitcoin wins. And this is how it works with the game theory. If you get into Bitcoin earlier, then when the arms race of everyone rushing into Bitcoin happens later, you'll be the prime beneficiary. And as such, the only logical thing to do is to start to accumulate Bitcoin. I think it's quite probable that the Chinese central bank, Bank of China, and possibly even Russia have begun to accumulate Bitcoin. This is not something they're going to announce until they've already taken a position. But the larger point here is that the current financial system as we know it is splintering. In the past, when this has happened, the transition to a new world reserve currency has been anything but peaceful. We had World War II. Before that, really, the British pound was the world reserve currency, or maybe even it ended in World War I. But the general point here is that the transition will be violent. It will almost certainly involve war. It will involve a lot of economic strife and volatility of assets as well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.